Hey, and welcome to Financial Reactions. Today we're going to take a look at actually processing covered calls. I am in Thinkorswim because that is my trading platform, and I am in simulated trading. As you can see in Thinkorswim, when you log in, you can log into a paper trade account, and it brings it up. Now it's basically the exact same screens as you would get in a regular trading platform. The only thing is, this is good for practice because if you make a mistake while you're learning how to do this kind of stuff, it's not real money, so you're not going to go broke, and gives you a lot more options, and you can learn what you like and don't like. So what are we doing? We're doing covered calls, and we're doing it for people with smaller accounts. So we're going to do each transaction at a couple hundred shares, and this watch list is weeklies between $7 and $30. I'd already knocked this one down a little bit, but under your tabs, one of them in Thinkorswim is weeklies, and that'll pull up all the weeklies. So it starts out at these really small dollar ones, and if you go into the trading, you can see that there's not much volume. So a good place to start while we're practicing, we're going to go to the $10 range. I picked this one. I picked a few earlier, so this is one of the ones I picked, just kind of playing around. So how does it work? Well, on the chart here, you can take a look at the stock, and you can say, okay, it seems to be trading sideways. On our chart, it's a 180 day chart. So this is quite a long period of time. You can see it had this spike here, then it dropped, and it had a couple little attempts to rebound, and then it settled back into this area. So we're going to think, okay, this might be a good covered call because it doesn't fluctuate a lot. So let's see what kind of prices we can get. To start with, this is your option chain, and these are your dates. Now today is a Friday, and it's after market close. So as you can see, today is April 10th and is 0, so these are not available. So those are all closed out. So we're going to do 1 week to start with. So we're going to go here. This opens up the 7 days. And then this is your strike price. Currently, the stock is at $10.02, so we'll go with the $10 is at the money. And then here's your choices. Do you want to go at the money, thinking it's going to stay at or around that $10 mark? If you think it's going to go up to a little bit, you go to the $10.50. So first of all, we have to buy some stock. So let's pick buy. We're going to go 200 shares and confirm. When you hit confirm, it'll pull up your confirmation window so you can double check, and do make sure you read this. If you see that you've made a mistake, you just hit delete and start over again. It looks good, and save. So that is processed, and since it's after hours, it's not actually going to show in the account right now. What I'm going to do is Monday, I can go in on my app on my phone, and I can make sure all these transactions actually get entered, and I'll show you what kind of price difference we get, because these prices will change by Monday. They'll probably drop a little bit. So let's see. So let's do at the money on this one. So we're going to sell, as I don't know if you can read it on YouTube, but when you hover over it, that's buy, that's sell. Open interest and volume. I like these two tabs because it shows you that there's plenty of activity, so your chances of getting filled are higher. If these were like in single digits, you might put in your trade in and never get executed. So we said this one we're going to do at the money. Now I know we paid $10.02 to get in, and we're doing the $10 strike price. Well, what this 44 cents is per share, and that's going to come off the stock price. So we are effectively paying 44 cents less. And like I said, this will probably be a little less on Monday, so whatever. We're going to sell. So you sell to open on this. Down here, you can see it's a sell. It's in the red, so that means sell. You're going to sell -2. Now, that's counterintuitive. It is a negative number. You're still selling 2. And limit best. I always use this. There's different options. I always use best. And then confirm and send. And you see on a option contract, there is a small fee, so we paid $1.30 total. That's for all of it. And we're going to get an $88 minus that, so we'll get an $86 credit to our account. Hit enter. Pops up, you have that contract here to sell. Then go to the monitor tab, and you can see we have the buy order and to open, and then the sell order for the calls. So let's take a look at another one. We'll do this HIMS. And we'll see that popped up. Go to the chart. It's currently at 19, so we'll scroll down to the $19. There it is. And okay, we're okay with that chart. It's 1945. Yeah, it's trending down, so this one we could go close to the money. So we'll go buy. We'll do the 200 again. Confirm. You can see there's no commission, 0. So that one's in the books. Then what we're going to do is go to the options. And this one we'll do, it's at 1940. So this is a good one. We could go 1950, so it's slightly out of the money. So for this one, it's 76 cents. So pull that up. We're going to do 2 contracts and confirm. Same $1.30 cost, but this one we're going to make $150.70. And then we'll go back to monitor, and those are in the books. And okay, we'll do this one. I'm just going to knock these out real quick so we have something to look at next week. Go to the chart. This one's been trending up, so we might go a little out of the money on this one. What's it at? It's at 946. So there it is. We want to buy 950. We buy our 200. Confirm, send. And then we're going to go to trade. So we're going to, let's see. It's at 950. It's at 950. See, this one doesn't have the implied volatility, so it's not as much. See, for the $10 we'd only get 10 cents, but since this one doesn't move very much, let's go ahead and sell the at the money, the 950, which is right above where we're at. We'll do our 2, and then what was the last one? The last one is CDE. And this one's got some good volatility going on right now, and it's at around $20, so it's right there. We're going to buy at 2020, 200, confirm, send, trade window. Okay. All right, this has got some good prices. We can do, we're at 2020. Now, that's a good one because you get some price increase in the stock and 65 cents a share on the call. So I'm going to go with the 2050 on this one. because that will give us a good return. All right, so here's everything is entered. Now, like I said, Monday when the market's open, I'll be at work, so I'll try and sneak away and take a break, and I will finalize these in the app. So that's the nuts and bolts of how to write a covered call. You have to have blocks of 100 shares, and then you can just go to the trade window. And as you can see, these were all 7 days. So this is a short, so I can do, hopefully next weekend, we can do a recap on these, and then we'll look at some of these further out. Because if you look at some of these, like I said, the whites are monthly, so the next monthly would be the 15th. And as you can see, for a month of time, you're only getting $1.10 versus 65 for the week. So that is not 4 times as much. So that's something you could think of. However, on the less volatile stocks, you might have to go out in distance to get a good return. So that's it for today's video. I do thank you for stopping by. And if you do me a favor, hit the like and subscribe button. And for next week, how about this? In the comments below, if you watch this, do me a favor and pick a stock that you think would be a good candidate for a 1 week covered call. Or just a stock you like, and we'll see if it works. But like I said, put the stock in the comments. I'll write it down and we'll take a look at it. And when I do the next video, we'll start with yours and I'll give you credit for it, obviously. But thank you for joining me. Remember, take care of your body, take care of your finances, and we'll see you in the next video.